Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. In questo momento indici in territorio negativo, ancora un po' di nervosismo sui mercati, ma ne parliamo con il mio ospite qui sul floor. Come vedete è Kenneth Polcari, che è direttore delle operazioni sul floor per O'Neill Securities. Kenny, buongiorno.
Buongiorno, come va?
Benissimo, tu come stai?
Oh, molto bene, grazie.
So Kenny, another week we are seeing the Dow transport going down. You know, we are monitoring the Dow theory, and we are seeing Germany in a correction mode. So is it coming?
Germany's in a correction mode. The rest of the European markets are all down between 4 and 7%. Now, granted, they are up nicely on the year, so it does make some sense kind of when the markets are unsettled, the anxiety building over Greece, certainly, anxiety building over the future of interest rates, certainly it makes some sense. And the fact that, you know, the Dow industrials and the Dow transports have been diverging is a sign of some concern, right? Now, I think what's interesting is we don't see explosive volumes to the downside. We've gone, you know, the Dow is now just negative for the year as of this morning. But we're not seeing explosive volumes, so you're not seeing that angst and anxiety building yet. But I really think that investors are really sitting back watching this whole Greek situation unfold, because now we are in fact getting one day closer, and so I think, you know, there's going to be that is going to be the catalyst when it happens.
And so the anxiety this week will be all linked to that, and still the bond market, of course, you know, we are monitoring the yields.
Well, the bond market, because now people are concerned certainly about, you know, our better than expected non-farm payroll report last week. What's frustrating, I think, for a lot of people with that is that's one report, one piece of macro data that was better than expected, when all the other macro data continues to come in mixed. And so we're still getting a very mixed picture from the state of the U.S. economy, albeit maybe we're getting better slowly, but we're certainly not taking off by any stretch. And so now, you know, it brings up the whole speculation once again about interest rates. We got the Fed who's meeting next week. We're going to expect something on June 17th. Do I think she's going to raise rates next week? I don't see how she can, except there's now a subsegment of the analysts and economists that think she's going to surprise the market. I'd be very careful with saying the word surprise the market. Markets don't want to be surprised, especially when it comes to an interest rate move. So my sense is that she might make it. She might change some of the wording, which allows them now to be a little bit more proactive as we move into the summer. I guarantee that's probably okay, but I don't think rates are going up anytime before September. And the other thing is, let's not overdo this. When we're talking about rates rising, we're still talking about rates rising from zero to still subnormal levels, and so I think people are getting caught up in this terminology. We're not talking about rates going to 8 or 10%. We're not even going to be 1% by the end of 2015, and so therefore, I think there's an overemphasis on you know, the discussion about rising rates.
So the Fed basically could also symbolically increase a little bit of interest rate and it will not make a big difference for the market.
No, it's not. Well, it shouldn't make a big difference. Even a 25 basis point increase is not. We're still so low in historical, you know, versus historical levels. Is that I don't see how it's going to have that much an effect. Although market psyche is what it is, and we've had zero interest rates now for 6 or 7 years, and so I suppose any move will cause the markets to become a tad bit unsettled. But we've been talking about this for so long. This is not going to hit anybody, you know, out of left field, and so therefore I think the conversation is a little bit overdone.
What do you think that the Federal Reserve will do in terms of the IMF latest message? Do you think that they will care about it at all? Do you think they will try to accommodate it, or to be very precise on their messaging so the IMF will be less anxious about interest rates rising?
Well, listen, I think Christine Lagarde and the IMF have a good point, right? First of all, they're concerned about Europe, they're concerned about what's going on in Greece, and then they're concerned about the extra volatility any rate rise in this country might have. That being said, Janet Yellen is in charge of the Federal Reserve Bank in this country, so no one's going to tell her, especially, you know, no one's going to tell her what to do other than her governors or her presidents among discussion. They'll come to it. But, you know, she's not consulting with foreign finance ministers or the IMF to decide what should happen here in the U.S. Now, that being said, she also is not oblivious to what's going on around the world and the impact that higher rates in this country may make to the rest of the world. So I think she's going to be cautious, but I do think in June she's going to open the door to at least a conversation that happens in September.
So you think it will happen in September? Are you still positive that it might happen in September, or you think that in case of especially if the Greek crisis will just, become deeper and deeper, it might be December of next year.
I actually think it's going to be later in the year, November, December. I'm still holding to that. But I do think after we've gotten this better NFP report, she's going to be able to use that to change the terminology and at least give her some leeway. If over in June, July, and August we get better macro data, then she's already changed the terminology and people won't necessarily be so surprised. Although I still think no rate rise in this country until the very end of the year.
So this week is going to be volatile, Kenny, until we have some clarity from Europe. What do you think?
Yes, and we got retail sales on Wednesday. I think we get retail sales, and they're expected to be very strong. Now you see that goes right to the heart of the consumer, right? The American consumer. Are they spending? Are they not spending? Are they saving their money, or what are they doing with it? And so if we get another strong report, then then they're going to start to stitch them together and talk about how the economy is improving, which will then, set us up for her meeting next week, which is the 16th and 17th, and then we'll have some kind of an announcement on the 17th about what the Fed now thinks. It is interesting, though, that, most recently we've had some kind of very cautious commentary coming from different speakers in the Fed. Ones that are concerned about the state of the economy, not so sure it is as strong as it is. And so now all of a sudden we've got this change in mindset, which would be a little bit confusing, I think, for the Fed to be able to, all of a sudden negate the comments from last week or the week before and say, no, things are better. That's why I still think she's going to be very cautious and that rates aren't going to rise till the end of the year.
So you were talking about the Dow Transport, but let's talk about the S&P 500. What do you think is going to happen this week, and which are the levels that we have to monitor?
Okay, so we've broken the near short-term support. Now we're going to test the 100-day, which is at 2085. We're just 3 or 4 points away from that. If we don't hold there, and there's a very real possibility that we don't, then we'll break, and then you'll see selling probably accelerate as it tests the longer-term support of the 200-day down at 2050 on the S&P. Now that's not necessarily out of line. It doesn't even still define a correction mode, right? That's not even still a 10% move off the high, but it is following with what's going on in Europe. All those markets have now all broken the short-term and intermediate levels of support, and they're all also testing their longer-term levels. And so therefore, in that sense, it makes sense that our market might follow as long as all this kind of global anxiety it continues to be with Greece. And so that's why I think once Greece situation comes to a completion, whatever it is, I think then the markets will shake out and then be able to concentrate once again on the macro data. So I think, yes, I think we test lower. There's no real reason at the moment for the market to go higher. Buyers aren't really rushing right out. There are plenty of buyers there, but they're happy to buy it on the way down.
And waiting and waiting and waiting.
And waiting and waiting.
Let's wait together. Thank you so much, Kenny.
Thank you very much.
Grazie a voi per l'attenzione. Alla prossima.